Guys, welcome to another Trade Genius podcast. Bob and Phil here. Look, jobs data, don't believe it. We're going to show you exactly why. Let's dive in.
Trade Genius.
Okay, Bob, I know we've talked about the household survey and why you should be following it, but this graph is going to put to rest any doubts anyone had on which data point to follow, Fed or household survey.
Yeah, Phil, and this is why, could you always reference the unemployment rate as kind of the trigger for a recession? And I'm always uncomfortable, not with what you say, but with the unemployment rate number, because I think it's fudged. And this shows that it's absolutely fudged. This is an amazing chart, guys. The blue's the household survey, the red's the unemployment one that you get the NFP. And there's a huge discrepancy and divergence because, as Phil just shared with me in our pre-call, the NFP counts every job. If you have 3 jobs, you get your 3 jobs. And the household survey is that if you have 3 jobs, you're only counted as 1 job. They're double and triple counting, just like they do in everything else with the government to make the numbers fudged a little bit. But this household survey thing is scary. Even that's rolling over, Phil. Everybody, is Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much more than what you put into it, and we'd like to see you in the room. Thanks for listening.
Yeah, Bob, I think it's a tale of the part-time economy, right? And really the healthy economy is going to have a bunch of full-time jobs that are growing and expanding GDP, both of which we are not seeing. We're seeing the exact opposite. On top of that, they're championing the reduction in the inflation growth rate, but in reality, we're all suffering still.
Yeah, and I think it's coming to a head now because this next chart is building up for the final chart. This is aggregate inflation rate, and I think this is probably conservative, Phil, 25.27% since January 2020. And we have customers that have been doing planning for big corporations, and their planning numbers were, 31% over the same period of time. So we know that these numbers are huge and they're unsustainable. And what happens is prices are allowed to go up as much as they want. But what suffers is what happens on this next chart. Sales collapse. And this is why I always use the word inflationary depression, because prices can remain high, but your ability to afford them evaporates. And so therefore, you just buy less things, or you start rolling down from the nice to haves to the have to haves to the expensive have to haves to the cheap have to haves until you're in poverty area. And that's what's slowly happening here. And funny thing here is McDonald's tried to save the quarter by dropping their pants and going back to the value meal, but it wasn't enough. And it's funny because you and I were just talking. I'm literally entertaining guests later this week, and for the amount of money that I would spend, just if my wife and I went there, which we don't go to McDonald's, I'm feeding 5 people, and probably better food with more condiments and more side dishes than if I just went to McDonald's. And we just went to the Habit Burger, which we do go to. My wife got a protein burger, and I got a regular double char, and it was $25. I mean, it's ridiculous. And you're not even getting anything. I mean, they're like this big. They're tiny.
Yeah.
They're not even burgers. They're, I don't know, bottle caps or something. So it's just amazing to me how much money people are spending on this stuff, and they're not really getting anything. So people, after a while, say, I just can't afford to do it. And I know I have a 23-year-old daughter. Before she moved out on her own, ate out all the time, and she can't remember the last time she went out to eat because they just can't make budget. So I think this is just another tell here, Phil, to I think a pretty nasty fourth quarter, earnings expectation. We may slip by, through this one here. We're kind of grinding here a little bit, but there's one that's coming that's going to be for the period ending in September. I don't think they're going to be able to hide or fudge or explain away. I think we'll be on full all raging selling.
Yeah, again, another data point that suggests that, we're probably rolling over, right? You don't see McDonald's sales slides. I mean, it's as cheap as food you're going to get. And to see McDonald's sales numbers slide, you're only going to see that during periods of pre and during recession. Okay. So again, another data point for that. Now, the weird part about all this is that the markets can continue to spike higher because why? Derivatives. And you can get this dislocation toward the tail end of the move. So like Bob was saying, it's very favorable in the mid-August for things. But if you are, again, if you're in 401ks or, retirement's close, hey, don't feel bad about going to cash here, because I think we're really, really close. And I'm going to share some data points later in the week. You guys are going to want to see that it's going to become very clear to you that, we're shaping up. Why this time would be any different, that we would just cruise through bad data points and no recession, I think is just highly unlikely. It's been 15 years, Bob, since we've had a recession. We've got inflation because of that, because they perverted the business cycle. We're late business cycle here now, guys, and it's time to pay the piper.
Yeah, and what makes it worse for the stock market is that they've done everything they possibly can to maintain, these PE ratios, and they've hollowed out their corporations, and they put stress on the employees, and the employees don't have any reserve, they don't have any spending money, and these offsets, then what they call the reversion to mean, are going to be really, really intense because we stretched the rubber band so far. That's why my view is once this thing starts, the selling starts in earnest, we're going to go all the way through 2025 in selling. And look what happened, Phil, just a little burp in July. Everything went down. I mean, you couldn't hide except for Bitcoin, which was ironic because that's what we were always waiting for, to see, can Bitcoin be an off-ramp to negative markets? But as soon as the markets start to burp back up, they started selling the Bitcoin again. So it's going to be really wild, guys. You're going to have to really, really be careful. That's why we love these pair trades that are going on with the YieldMax products. You can kind of stay engaged, pick up yield, and somewhat protect your portfolio through biasing these trades. So check us out, tradelikeagenius.com. Tomorrow starts the Fed meeting. Wednesday's the Fed announcement. It will move the market. Depending on what he says, could be a dip, but I think then we're going to get a rip. I think personally, Phil, he's going to start walking back the hawkish statements, and the markets, I think, is going to front run the September rate cuts. That's my view.
I 100% agree. My view is that if the market sniffs out a rate cut, they're going to target that for a ramp job. And so if the odds increase that it's going to be September, then we may not only see a pump into August, we may see a brief pullback and then another surge into September. And it's not uncommon that also you get a pump beyond that, so that then potentially be open to maybe a pump into the election as well. And it's just a series of higher highs and higher lows. But at that point, I think we're on severely borrowed time, Bobby.
Yeah, and look, we're going to take this one pump at a time because we didn't make a new high yet. So that's you got to watch that now.
100%.
So anyway, but guys, hey, we're just rambling now. We'll catch you guys tomorrow.
See you later. Bye-bye.
Trade Genius.